Ladies and gentlemen, thank you very much for attending this panel. I think it's going to be a great one. These three gentlemen were talking a little bit before, and I think you're going to be in for a very exciting FinTech discussion. I would like to start with a short introduction. I'd like to introduce you to Brad Garlinghouse, who is with Ripple. He's the CEO of Ripple and a member of the board of directors. Prior to Ripple, Brad served as a CEO to file collaboration service Hightail. Previously, he was the president of consumer applications at AOL. Ripple provides one frictionless experience to send money globally using the power of blockchain. By joining Ripple's growing global network, financial institutions can process their customers' payments anywhere in the world instantly, reliably, and cost-effectively. Taavet Hinrikus is founder and chair of Transferwise, one of Europe's leading tech companies and one of the world's leading fintechs, a new kind of financial company for people and businesses that travel, live, and work internationally. Founded in 2010, they now have customers that are transferring over $1 billion every month with Transferwise, saving themselves more than $1.5 million every day by using Transferwise rather than other providers. And I should say that's pounds, not dollars, so even more. We also have Tim Grant, who is the CEO of DrumG, a developer and operator of distributed ledger technology applications for the global financial services industry, capital markets, banking, insurance and reinsurance, asset management, regulators, and central banks. Tim was formerly head of global business development for R3 and CEO of R3 Labs and Research Center, which focused on bringing together a unique virtual and physical environment where now distributed ledger technologies and methodologies could be researched, evaluated, and accelerated towards production. So the topic of our discussion today is alternative payments beyond hype. With the world going cashless, what are the challenges and opportunities we can expect in the world of payments? I would like to start with the basic question, is the world really going cashless? And to start, we could start with Ripple and ask, does Swift GPI do the job, or is there a need for better technologies as the world goes cashless, if it indeed does?
So I'll start, first of all, thank you. Thanks everyone for joining. When you look at how things are changing, they're changing, I think, more quickly than we'd expect, but we still do live in a world where to move money cross-border between networks, takes order of magnitude 3 days, 4 days, and it's slow, it's expensive. And so when we talk about cashless, what Ripple's really focused on isn't so much about whether or not we go to a cashless society, it's more about reducing the friction. Frankly, I don't think we are moving away from a cashless society insofar as fiat currency, I don't think is going away anytime soon. I would even go so far to say is those in the kind of Bitcoin community who have espoused, kind of an anti-government, anti-bank, and anti-fiat currency, I think it does us a disservice to embracing technologies that can be impactful and innovative to improving the nature of how kind of funds flow. So Ripple has taken a view of governments aren't going away, banks aren't going away, and in fact fiat currency or cash isn't going away, although we obviously credit cards and non-fiat or non-cash things will continue to grow. So it depends which part of the question we're talking about.
Well, let me throw that to Transferwise then. Where do consumers currently stand? Are you in agreement with Brad that cash is king and is going to be king? Or do you think the biggest challenges are going to be new adoption to payments and transfers as we move forward?
I think it's really a very multi-layered cake. So if you think about money moving across borders is digital. There are very few people who are carrying money in kind of big plastic bags across country borders. So I think that's kind of definitely a cashless use case. But then again, there are certain places where cash is still pretty convenient. Everybody accepts cash. So if we think about let's take Bitcoin as an example. People rave about Bitcoin, but you can do much less with Bitcoin today compared to 3 years ago. Can you buy a coffee here with Bitcoin? No, you can't. But you can do it with cash. So I think different use cases, different countries, and overall, while inevitably digital will take over in time, it's really a question of how quickly will habits die. People are used to using cash, and we still hear many stories about people who get a bank account maybe in a developing country, who will get their salary deposited to the bank account, but then first things they do is go to the bank and take all the money out in cash. So old habits die hard.
Tim from DrumG, where do financial institutions currently stand, and what are the missing pieces to get broader adoption for cashless societies?
Firstly, I'd like to point out that the bloke who introduced us accidentally said beyond hope instead of beyond hype, which I thought was quite funny. And some sort of Freudian slip, perhaps. So look, I've spent the last couple of years barreling around the world speaking to financial institutions, central banks and regulators, as we all have. We're in that space. And you know what's really interesting about the space is that there is no one-size-fits-all answer for any question that you can throw at us, because it depends on the government, depends on the predilections of the society. Some financial institutions and some systems in some jurisdictions like to do things one way and some like to do it other ways. Some consumers in certain societies like cash and some don't, like Sweden famously looks like they want to be cashless within 10 years and all that stuff. So in the financial institution space, it's exactly the same. Having kind of met a couple of hundred banks in the last couple of years, there's the really kind of forward-thinking ones who've put money into this, who are thinking about changing business process, who are thinking about their consumers and how this might actually help them. And then right at the other end, and it's a long tail, unfortunately, you've got a lot of banks who are just kind of, the term people say is they're tourists. They're tourists in the fourth industrial revolution. They're just kind of toying with the idea that we might actually be going through a material shift in how we live our lives and how we connect between people and governments and companies. So there's a whole range of kind of levels of advancement in this space. And the big question is, where are you on that? And of course, you generally can only move as fast as the slower people. So, you know, what needs to be done? More financial institutions, it's not just banks, and more regulators and central banks. And let's give a big shout out to MAS, who are generally and consistently one of the most progressive governments out there, and have allowed all of us to really go probably a lot faster than we could have done otherwise. We need more of that. But we need financial institutions to sort of get off the fence and start realizing that in the long term, I mean, look, let's think about it, right? There's a way to play a game. There are rules of a game, and then there's the game itself. If you believe that you just want to play the game better, good luck with that, because the rules of the game are changing, and in fact, at some point soon, the game itself is going to change. I actually think everybody here really believes that ultimately the game is going to change. If the banks out there who think about just saving a bit of money is the answer and cropping out some costs is the answer, then you're just playing the game, and good luck. You're going to be playing the game, and the rules are going to change, and you're suddenly going to find yourself in trouble. People and governments and financial institutions need to really get with the program that the game is changing.
Well, let me jump in. Let me jump in there, right there, Tim. And I think one of the things that everybody in this room wants to hear about is how things will change and how they will progress. A lot of people over the course of this event and throughout the months leading up to this event are asking about what is really happening, what is the hype, what is the fact, what is the fiction, which is the point of this panel. And one of the things that these three gentlemen were talking about just off stage before we came up was, is blockchain real? You know, what is blockchain and what is the evolution of blockchain to the consumer? So I'd like to start maybe with Brad. If you could really tell us if you think blockchain is something that's going to be significant, and is it really real?
So I'll start segueing from something Tim said and what you built on. I think there's a ton of hype in the blockchain space. That doesn't mean, though, that blockchain isn't real. It doesn't mean that blockchain isn't transformative. But I think, frankly, and again, something that Tim said, I think we as an industry have an obligation to educate central banks, to educate government regulators. The reason why some governments are more progressive than others often is they're being proactively engaged and educated. I think what hurts us is when people go out there and say, you know, some people are aware, Ripple hosted an event in Toronto a few weeks ago, and Vitalik from the Ethereum effort put forth that the competition is the $10 Canadian bill. If we think fiat currency is the competition, I think we actually do a disservice to what we're trying to do. there is a lot that blockchain can do to reduce the friction of transactions. To answer your core question, what blockchain enables you to do is to have two parties transact without a central counterparty. That can be security settlement, that can be payment settlement, where Ripple is focused. But there's a lot of different use cases. And so the fact that you can now settle a transaction without a central counterparty changes the nature, to Tim's point, it changes the nature of how transactions can happen, which is great and transformative, but we don't help ourselves by hyping up, frankly, a bunch of, using another Tim word, bullocks about how you can track flower freshness with a blockchain. Like, that doesn't make any sense.
Taavet, let me throw this over to you. Obviously, fiat currency is very important to Transferwise. Do you think that physical $10 bill is still important? Do you think that's going to go away?
So, as I was saying before, I don't think physical currencies are going away anytime soon. You know, over time, digital will take over. But you know, kind of going back to the blockchain topic, I think the biggest trouble with blockchain today is people are violently putting blockchain on everything. Okay? Like, there are certain cases where blockchain makes great sense and distributed ledgers, but you know, just trying to put it on, you know, count flowers with blockchain, it's just bullshit. It's just a way to rip off VCs to raise money. Say we're doing blockchain with machine learning, and then you get less intelligent VCs to give you money.
And big data.
Big data, yes, and then social, local, mobile to go to the really last decade VCs. But you know, I do believe that distributed ledger technologies are incredibly powerful, but I think we haven't yet quite seen where will they have the most impact. And you know, and still, which are the cases where an Excel sheet actually is a much more efficient way of counting your flowers? So I think we're kind of yet to get to that point, but I'm kind of hopeful that we'll see blockchain use in many places. And you know, in the end, if I put my Transferwise hat on it, you know, for us, it doesn't matter. You know, whatever enables us to move money cheaper, faster, you know, we'll make use of it. If Ripple enables us to move money cheaper and faster, we'd love to use it. So, you know, whatever enables us to give the end user benefit. And I think, you know, what oftentimes gets forgotten is we should think really about who are the real people on the street who today have these $10 bills. How do we give them a better service? How do we enable them to do more with less? More with less?
Tim, I want to give you an opportunity to answer that question as well. Blockchain, is it real?
Well, it better be, otherwise my company's toast. Well, look, you know, and Brad, you alluded to it, is blockchain real? Does the technology do what everybody says it can do? I don't think that that's a question anymore. There's too many companies around the world, too much capital, legitimate capital through legitimate capital raising means that has gone into this, to suddenly assume that this thing's a fad and that blockchain and distributed ledger technology doesn't actually deliver a material evolution of the internet to create a global processing layer and a methodology to view truth and facts. Like that's true, that's real. But where everybody's rightly getting a little bit nervous is, well, where's the real value to, and I think you're right, Taavet, it's about, at the end of the day, you can talk about banks saving money, but the consumer, us, we all saw what happened with the internet. That affected our lives. Is blockchain going to affect our lives? And the truth is we haven't seen that yet. So 2018 needs to be the point where large enterprises can show, in really crude terms, that the net present value of transition is positive, i.e. that it's worth spending money to get this technology implemented, because when you get to the other side and you kind of look at the net present value of all the cash flows coming back, that it's worth doing. And if that's not proven to be right, then everybody should rightly say it was a fad.
Well, if that's... Go ahead.
Playing devil's advocate, there are people in the room who remember maybe it was 2010 when group buying was all the fad. You know, how many companies raised gazillions of money, and what came of that?
I think if we ask about the reality here, right? Argentina seems to be the perfect proving ground for the power of digital currencies. why is there not more adoption in those countries? And Brad, I would like to ask you that question to start with.
Well, so as Taavet was saying, I think any question we answer, you have to kind of parse, well, what is cashless? And Argentina is an interesting use case because the local currency has lived through massive inflation, and in some cases you would say, well, fiat currency in Argentina that might be more interesting to hold even a volatile asset, a digital asset that might not be fiat. So, but I also, if you think about how many people in Argentina, let's just do a quick poll in this room. I know it's not necessarily a crypto room. How many people in here own a digital asset, Bitcoin, Ethereum, or XRP, any of the above? So maybe...
And keep your hand up if you've used it.
That's what I was going to ask next. You took, yeah.
Keep your hand up if you've used it to buy something.
Have you bought something once with one of those digital assets? So most of the hands are down. We have 2 or 3 hands up.
3 hands.
And how many have bought something more than once?
There's 2 hands.
So other people who put your hands up are just greedy.
Look, I don't want to get too far off your question. Argentina, there are markets where digital assets and digital currencies might make more sense than other markets. When I talk about, we aren't moving towards a non-fiat world, the Singapore dollar is a pretty strong currency. The yen, the dollar, the euro, I don't think these things are going away anytime soon. That doesn't mean there's not a huge opportunity to leverage digital assets to reduce the friction, to reduce the speed, or increase the speed. And certainly that's what Ripple is focused on by working with governments and working with banks. So I think we're moving quickly into that world. I like the topic of beyond hype because I think the problem is for journalists and for customers, it's separating fact from fiction. Until a few years ago, I'd never heard the word alternative facts or fake facts or whatever. Like, it was easier to discern, but I think a lot of people are talking about what are science experiments are not a business model to solve a customer problem. They're not a business model. We have to move beyond hype. Ripple now has 100 customers we've talked publicly about. And I think it is getting well beyond hype, and we certainly think we want other people in the blockchain industry to succeed in the same regard.
So I think also a more interesting example maybe besides Argentina, and by the way, I was in Argentina 3 weeks ago. I couldn't buy a steak with Bitcoin.
But it was a good steak.
But I think a better example is maybe to look at what's happening in China, and if you think about how people are using WeChat for payments, that's a form of digital currency. It's not using blockchain, but who cares? It works. So that's much more interesting to look at, how quickly the adoption has happened there. And the reason it happened is because it gives people a better experience. It's cheaper, faster, better. So, whatever powers cheaper, faster, better is what's going to win the consumers' minds.
I think the most shocking revelation of all of that is that Taavet actually has Bitcoin that he tries to use.
Actually, I don't.
Tim, I'd like to throw this question over to you as well. What do you think about someplace like Argentina being able to implement? Because you said, I think that you will have this evolution. There will be people using it. Why is it not being implemented now in these places?
There are technological issues, right? I mean, you can't deny that the evolution of both cryptocurrencies and the underlying blockchain. And boy, do you Bitcoin maximalists get really upset when we try and separate the two. People get really upset because you can't separate Bitcoin and blockchain. Gets really religious fervor becomes the order of the day. Well, there's plenty of evidence to the contrary. But ultimately, for both, we're still hitting up against limitations of technology, scale, regulation, compliance, social acceptance. I mean, we've still got a long way to go. However, there are some good examples of where you're starting to see some pickup. And I think Ripple is a great example of this technology actually being used at some sort of genuine scale in the enterprise. Bitcoin, you say what you like about Bitcoin, it's a hell of a successful experiment, right? I personally think that Satoshi Nakamoto, whoever he, she, or they are, should get a Nobel Prize. What an extraordinary and amazing thing. I mean, the thing hasn't broken, despite all the crazy arguments that go on in that camp. I mean, it still hasn't broken. So you can't actually say that it hasn't been successful in some way. Now, it's also been successful in creating illegitimate ways for people to have trustless, permissionless exchange of digital value, which then you're getting into regulation and people who want to be crypto anarchists and people who don't want to pay taxes and don't want to be identified. But does that necessarily mean that it doesn't work? I think that's something else. We're talking about something else. So it's a matter of time, and the proof points, I believe, are there. I think ultimately they're there.
Thank you. I want to change topics a little bit and talk about the bank accounts for all strategy and if that's really the right way forward. Will bank accounts for all encourage alternative payments, or will people just withdraw the money that they have in their current bank accounts? And I kind of want to open this up. I think, Brad, you had spoke about this a little bit before, about people withdrawing that money. Do you see this as a cognizant and an appropriate way forward for governments to strategize, or do you think it will just end up with a new way to move cash or a new impedance to cash?
I want to make sure I understand the question. I mean, when I think about this, I think largely about that there are huge segments of the world who don't have access to the financial system. We call them the underbanked, we call them the unbanked, and when you boil that down and say, well, why is that? It's really because banks can't serve them profitably. Banks are capitalistic institutions; they want to make money. If you give them a way to make money, by the way, when I say banks, I really mean financial institutions broadly. I would put Transferwise on this list. Taavet wants to make money. If you can give him a way to make money to a segment of the population that you can't serve profitably today, if you could make money from them, then people would enthusiastically serve them. A lot of that comes back to friction and the cost to serve, particularly migrant workforces that may be moving from country to country. The cost to move that money might exceed the value they're trying to move. Ripple's working with the Gates Foundation introduced an open source technology called Mojaloop, which is really about enabling everything from wireless carriers to other payment networks to adopt an open source such that you can have interoperability between networks at scale. Some of that might be domestic. I mean, the Gates Foundation is obviously thinking about truly the unbanked and societies where there isn't even a good central bank or domestic rails. But it's also how does that make sure it interoperates with the rest of the financial ecosystem? And building that on open source technologies like Interledger Protocol, that interoperability piece, I think, is critical.
Taavet.
I think Brad made a great point about banks. But I think what we need to think about is, I keep on going back to the consumer benefits. So I don't think people who don't have a bank account in the world yet, they probably don't need a bank account in the way we think about it. They don't need their bank to have hundreds of branches. They don't need a credit committee. They maybe need something, a bank which will sit on their mobile phone. Maybe it's a mobile wallet, because having your money in some digital account does make it more easy to handle, more easy to move around. So, maybe we should make sure everybody in the world gets a mobile wallet. It's not about getting a bank to go to developing parts of the world and building bank branches. It's about kind of some digital way of giving people access to money, which will make it easier for governments and everyone else. And by the way, if your money is digital, then probably also credit decisions become much easier because there's some kind of history. And if it's easier to keep that history in a blockchain, then the hell, let's do it. But maybe it's easier in Excel.
So you touched on something that I wanted to bring up as well, which is the InPacer model. And do you think that then is a sustainable model? And from what I'm hearing, you're saying yes. Is that fair, or is that answering for you in a way that you think would be different than what the InPacer model does?
So I think InPacer is one great example and one way this could be done. But I guess then you can take the counter argument is why is InPacer only successful in one country? So that probably points to something. But if we look at it, then I do believe that people are getting access to digital money. Hundreds of millions of bank accounts are being opened in India every year, so new kinds of banks are coming. So these people don't need banks in the sense of banks we know, kind of the Citibank of the world. They need a much better and modern way of handling their money.
Tim, you obviously are working with lots of banks around the world and lots of financial institutions, we'll put it that way. How do you see them responding and adopting to a situation like this, or is there a profitable way forward for financial institutions in the interbank sector?
So again, it goes back to what I was saying before in the sense that if you genuinely buy into that this is the fourth industrial revolution, you can call it that or call it something else, that the third industrial revolution is over, that the swan song of the third industrial revolution was the internet and Airbnb and Uber. I'm simplifying grossly, but the next step, blockchain, AI, all the other buzzword bingo terms, 3D printing, quantum computing, which we can't ignore, that is going to change the way we all interact, companies, governments, and individuals. Then the question you're asking generally is, I would go, is what are the role of all those players in this new future state? And if you're a bank and you think in 10 years' time that everything's going to be just the same, then I think you're really myopic. And if you're not, nobody knows the answer. And a great example outside of financial services and a cautionary tale is the music industry. Look at, this is a great example you can use. If you look at all the business units of Sony about 10 years ago, they actually had all the pieces that Apple ended up having. But they totally just let Apple take that entire ecosystem and own it. And that's because Sony was thinking about it in old world, old game thinking, and Apple was thinking about it in new game thinking. And I think the banks are going to have the same situation. Financial institutions look at this burgeoning set of startups who are doing things in different ways. You can drag your feet, but ultimately 10 years from now, 15 years from now, 20 years from now, and this is in a horizon that matters to everybody in this room, everything's going to be different. How will the role of banks change? How does the role of trust change? A wallet is a really interesting concept. It's kind of a mini bank. It's just a place where you can trust to put stuff and it won't get stolen if you're lucky, right? You have to kind of think about it that way, and there's a big challenge. There's a big sort of inertia in all the institutions we work with all the time, where they're just going to think about it in like it's 1998. There was a conference in Hong Kong called the Internet Economy Summit. I'll get in trouble for saying this. And I thought it was incredible because that was a few months ago, the Internet Economy Summit. I'm like, guys, it's 2017. The internet is a 1998 phenomenon. Like, you've got to be thinking about the fourth industrial revolution, post-internet economy summit. I think that tells you what you need to know.
I think it's easy also for us in the fintech world to easily chastise financial institutions and chastise regulators, but they have a very important role, and they have a role that is there for a reason. So what can we as fintech innovators do to get some of these financial institutions and regulators to move along with us? I know Singapore has done a phenomenal job of providing sandboxes for people to play, and the UK provides a great regulatory sandbox, and it's really a progressive ecosystem. And I'll start with Brad, what do you think that you would like to see from financial institutions and governments, knowing that you work with both very closely?
I love this question in part because I think it is so important that the industry is proactive in engaging regulators. I think many in the industry are quick to blame regulators. As one manifestation of this, Ripple brought together about 30 plus central banks from around the world. I think it was 2 weeks ago, yesterday or the day before. My time zones are screwed up, but in New York City, we had a private meeting where it was, 20% it was talking about what Ripple is doing and socializing with central banks from around the world what Ripple is doing, but 80% of it was letting the central banks talk to each other. We have found that when we're meeting one-on-one with central banks, that we're having a lot of one-on-one conversations, they want to understand what other central banks are thinking about blockchain. What are they thinking about crypto? What are they thinking about the risks, the pros and cons to some of the evolutions? And so for us, it was, let's create a catalyst to bring them together and talk about it. And yes, we were one participant, but it was important, frankly, it was a private event because I think it was easier to be open and direct about what's going on around the world. But I think we all should need to be proactive. And I think those that like to throw the regulators under the bus and say they're stymieing innovation, they're slowing things down, to your point, they provide a critical piece to the stability and mitigating fraud. And these are things that matter, whether it's blockchain or other digital assets, that they matter.
So I strongly believe that regulation is necessary in the world of money. We don't want everyone and their dog, taking your money and running away with it. So I think regulation is really important to ensure the safety of the ecosystem. But at the same time, I think that regulators can do more to think about how do they become enablers of innovation. How do they make the playing field a little bit more level for everyone? I think tech entrepreneurs probably shied away from regulation for a long time because there were plenty of other industries to disrupt. Whether it's music or e-commerce or so on. It was kind of easier not to deal with regulation. But now I think we're becoming increasingly good at dealing with regulation and understanding that it's really about engaging with them early and often. Like back in the days, regulation used to be mostly impacted by incumbents because they have the bigger lobbying budgets, and so it kind of happens that they shape the regulation. But it turns out the regulators do listen to you, and we can see now how the UK regulator FCA is doing a fantastic job, and they're one of the few ones, maybe the only one that has the word innovation in their mission statement, and they've done a great job of pushing the industry forward. It's fantastic to see what the MAS is doing. So the speed at which Singapore is moving regulation forward is amazing, and I wouldn't be surprised if Singapore will surpass London in this sense pretty soon. But I think the key is that regulators need to kind of focus on taking down the barriers and enabling the newcomers to enter this space and to trial things. So the sandbox is a great example, but we just need to think about how to make it an equal playing field between incumbents and newcomers. And regulation is the key there.
I've got a story to tell you. Well, firstly, actually, before I tell the story, here's a point. People used to use the word Uber, the verb Uber, a lot more. They've stopped doing it so much recently. Now I come to think of it, to Uber things.
So use blockchain now.
Yeah, now blockchain has become a verb, as the guy from MIT wrote in CoinDesk the other day, much to my hilarity. You can't do Uber and Airbnb, i.e. a couple of guys in a garage out in San Francisco, upend an entire industry, because if you try and do it in financial services, you'll go to jail, right? Because it's highly regulated. So you just kind of, at the end of the day, you need to have regulators and central banks around the table. So here's my fun story, and this is how it should work. August of 2016, I'm with the Deputy Prime Minister of Singapore, I'm with Ravi Menon, who runs MAS, and Supnendu Mohanty, who runs FinTech for MAS. Now, that was a 30-second conversation. And during that 30-second conversation, the last 5 seconds I said, so how about we think about putting the Singapore dollar on the distributed ledger? Now, I walked in here the other day, and I saw that there's a 20-foot stand with Project Ubben written on it, where there is a maelstrom of people and a lot of central bankers from around the world, and some of you may have seen it. If you haven't, you should go check it out. Because that conversation led to Project Ubben with multiple phases and ended up coming out of R3 in the lab that I was running at the time, being a multi-ledger protocol with multiple banks. And now Ravi Menon has suggested that they're going to connect this with the Canadian regulator. Now that's what I'm talking about. That's being proactive. That was only August of last year that it was literally a conversation with nothing done at all. Now we're doing real work, real money being spent, real activity, real thinking about policies and risks and how this is going to affect enterprises and communities. So this can be done, right? And it's doing some experimentation is not a policy statement. It's experimentation and innovation. I love your point about the FCA. They should all say innovation, but it'll be an exciting time if all of the jurisdictions can kind of get behind it in the same way.
Thank you. And I'd like to remind the audience to use the Pigeonhole app. We have a few questions. We'll get to those. I wanted to talk about something that came up more recently in our discussions, gentlemen, which was ICOs. And Tim, I'm going to throw this back to you because you promised to be able to explain this concept to the audience if they don't already know what it is, and we'll go from there.
Oh, well, this could be fun. So First there was Bitcoin, a primitive currency, and then there was Ethereum, another primitive currency. And now we seem to have a situation where, let's just go to the straight to the ridiculous. My favorite coin is Wu-Tang coin. That is my favorite ICO of all time is Wu-Tang coin. Now, this was, in theory, to develop money to go and buy the one and only ever version of an album. They made one album and one copy of it, and this was what this was for. Now, this is everything that's wrong with the ICO market. But let's be a little bit more less facetious and a little bit more kind of constructive about it. The ICO framework as a way of raising capital is quite elegant, actually. It makes a ton of sense. The problem is it's the Wild West, and I don't know if anybody with a straight face isn't going to just acknowledge and admit that the vast amount of money that's gone into it is people who own Ether and Bitcoin that need to recycle it, and a bunch of half-baked ideas at best that will never come to anything. Vitalik Buterin, the inventor of Ethereum, has himself said, I think he's quoted as saying 97% of ICOs are going to fail. So I'd love it if we could all just... Who thinks ICOs aren't going to blow up? Do any of you actually believe that the ICO craze isn't going to blow up?
There's a few hands out there.
You saw it here first, folks.
I see a few hands out there. Let me ask a different question. Who knows what an ICO is? Okay, significant number. So of all that number, there's only 2 people that I saw with their hands raised.
That's an extraordinary statistic.
Well, part of the extraordinary statistic is billions of dollars have been raised through these ICOs. Although I will comment just as a kind of a sidebar here, that also is kind of bullocks, because when you, quote, raise that money, you now hold a digital asset. You need to get a bank account. If you want to pay your workers or pay your rent, typically they're not going to accept Ethereum for that payment, so you have to get a bank account. And a lot of banks won't they won't let you put fiat in there because they don't know the source of funds. And they don't know that, is this, subject to AML and OFAC and all the kind of normal requirements. And so, look, I will predict that the ICO market, I think people may go to jail. Like, I think it's the fraud that has been committed, and I'm not just saying that because the likes of Paris Hilton and Floyd Mayweather have tweeted about it, but it's a sign of, like, the hype is so far out there, and I think a lot of what's happening, I think it will, both from the business is being started, I don't necessarily think it'll be successful, but it's also the regulators are increasingly getting involved. You're seeing that in lots of markets. And by the way, I think that's bad for the Ethereum market, the ecosystem of Ethereum, because so many of them are either using Ethereum to buy the tokens or it's being built on the Ethereum blockchain. I don't think it's, if and when that blows up, I think it's not going to, well, I should say when it blows up, because I don't think it's an if, when.
I think, unfortunately, it has scam written all over it with a $sign instead of an S. And it's gonna blow up, and it's gonna hurt the blockchain ecosystem in a bad way. Like, I do think there are certain legitimate projects, whether it would be something like Filecoin, where it is part of the business model and it makes a ton of sense. But the rest of it is just bypassing of securities regulation, and people probably deserve to go to jail for it.
So can I add a little extra? So that's I think we're all in agreement, apparently, apart from 2 people. So, but let's think forward. Let's be constructive. I think we can all agree that if regulators and central banks and compliance departments can get their head around this, and the technology evolves, and maybe there are new primitive coins of different sorts, and maybe we have to make sure they're quantum safe because quantum supremacy is just a few years away, etc. But let's just assume we get there. The ICO, that as a means of raising capital, is a very interesting mechanism that might sort of get in front of the crowdfunding kind of area potentially. And what I can say, I'm sure some of you know, there are some very big multinational companies that are thinking about this now. You'd be foolish not to. Law firms are getting behind it.
Can you educate crowd how is ICO different from crowdfunding?
Well, so the crowdfunding doesn't involve that medium of a digital asset, right? I'd say the crowdfunding is, here's a website, here's a project, give your money, it's real money, it's fiat currency that's somehow transferred in. You have some sort of interest in the outcome. And that's worked in many cases really, really well. There's been as many scams in that as other things, but that's worked really well. I think what's interesting when you look at crowdfunding, it's a very jurisdictionally kind of relevant-ish thing. You can certain countries do it really well, certain are favorable for it, certain others, there's different regulations. What would be really interesting is if we could move it into a whole new sort of digital or virtual currency mechanism without borders. And this goes back to what I think a lot of us are talking about. This is about making less friction. Now, if a great idea in Miami, USA can be funded legitimately with regulation, with KYC, with AML, by anyone in the world, with real security, that's good for society. And we don't really necessarily have that now. And look, the ICO could be a very legitimate end state. Let's hope it is, because I think it would be good for all of us.
Is it the problem in the world?
The movement of capital?
What is the problem that ICO is solving? Is that a real problem that billions of people have in the world?
Can I jump in? I totally agree with Taavet's going here. This idea that like ICOs are solving a capital problem, it's called angel investing. It's existed since the beginning, like since my whole lifetime. So now we're democratizing angel investing so it's available cross-border. But like, look, when you're investing as an angel investor, it's about the people. And if you're investing from Singapore in a Miami startup and you have no idea who these people are, don't do it. Like, that's my best advice. Like, it's just, you have no idea if they're just going to take it and run. You know, Miami's a nice place to spend time on the beach.
Again, this is where the regulators need to step in, right, and monitor some of these things. I'd like to move to some of the questions from the audience. We have one directed at Ripple. How do we scale Ripple from 1,500 transactions per second to 25,000 transactions per second processed by Visa? Is it mainly an engineering challenge, or are there other factors?
So I love this question, partly because it lets me talk about how XRP and the performance of XRP compares with Bitcoin. So, you know, Bitcoin today, you know, as was said earlier, Bitcoin in many ways has been a successful experiment, but not when it comes to payments. The throughput of Bitcoin, both in terms of to confirm a transaction, often can take an hour. I think Taavet said earlier, you're not going to use Bitcoin to buy coffee unless you want to wait there an hour for it to confirm the transaction. And then the transaction cost would be pretty high. So your Bitcoin handles, you know, somewhere around 10 transactions per second. Today, XRP can do 1,500 transactions per second, so that's better. Now the question is, hey, how do we get to 25,000? Well, we've increased the throughput of XRP many-fold by having some of the best, truly the best C++ team on the planet working on this problem. And so there's work to be done there. But I think what the question doesn't fully recognize is that when we work with banks, we are using as an underlying technology something called the interledger protocol that allows you to go point to point. And it doesn't necessarily touch the XRP blockchain every time. And so that allows you to scale truly to beyond Visa, because you can really scale it the same way the internet has scaled. You know, the bank of Taavet, the bank of Brad can settle at the same time as the bank of Tim and the bank of Brad. And so the scalability, you know, scalability is not an issue. Now, the performance of the XRP ledger, the blockchain there, you know, we're already, you know, massively more performant than anything else in the industry. And we obviously are spending a lot of time and energy to see that increase. And if we can get it up another 5-fold over the next 2 years, as we have over the last 2 years, that would be not surprising to me, and I think we'll make good progress.
Great. Tim, I have a question that I'm going to direct towards you here about China and cashless payments. The question is, I'm surprised nobody has mentioned China as we talk about cashless payments. Last time I looked, everybody is paying using mobile phones and QR codes on Alipay and WeChat. What's your view on that?
No, it's a good point. We should have mentioned it. I've spent a bunch of time in China in the last couple of years, met with some firms and met with some regulators and central banks as well, or the central bank. Look, it's hard for people outside of China, and particularly, it may be less so in Asia, but anywhere else, to comprehend the magnitude of what's going on in China. When you know how big WeChat is and how big WePay is and Alibaba and Alipay and all that, you sort of recognize right there that this is beyond just maybe an interesting idea. Like, this has become a way of life for the most populous nation in the world. But it's also fascinating the extent to which, clearly there are vagaries of the Chinese government and Chinese regulation that mean it's relatively walled off. I guess the sincere hope is that in due course that can seep out, that positive kind of acceptance of different ways of paying can seep out. But there's no doubt that it's sort of the ultimate proof point that different payment mechanisms can and will prevail over the old school way, which is the old game. Like that is the very definition of the new game. It's kind of extraordinary. It's a great question. It's a good point.
I'll just chime in. I think entering China successfully for any of us up here, I think as history has demonstrated, is about partnering locally. Ripple has an extremely successful partnership in Japan with SBI, where we have over 60 banks that have come to the table, and SBI has done an incredible job there. And I think when we think about China, we think about it the same way. We want to have a local partner that knows that market incredibly well and can help bring the technology to market. I think to the point around cashless at a consumer level, I would go back to, you need these networks to be interoperable. You need them domestically and cross-border to be interoperable. If someone wants to use a payment in WeChat when they travel to San Francisco to buy that coffee, they want that to be interoperable. And I think that's the problem. The Internet of Value that Ripple sees happening is all about that.
So, I think I mentioned China before. It's definitely the kind of the best example of how cashless society can work, and we're seeing people adopting it because it's a better solution.
Thank you. I want to change gears a little bit. We touched on this, and the three of you have significant operations here in Singapore. We spoke a little bit about the regulators and what they're doing to kind of move their fintech culture forward. What was interesting about Singapore? What made you want to make the investment here, and what do you see as the growth pattern for your company in Singapore going forward? And I'd like all three of you to answer that as well. Tim, we can start with you.
Sure. Let's take it all the way back to where we started. In a way, like what is when can you get beyond the hype and make it real? You need an ecosystem of where all the players are close, where there are a small number of regulators, so not the USA, for instance, which is just a ton of different people you have to deal with, where you can get around a table and make things happen. And the Project Ubben example I gave earlier is a great example. So that's what this jurisdiction provides. And I think it's obviously one of the biggest and most advanced economies or financial services economies in the world. There are very few places where you can get so much done so quickly without kind of resorting to being an offshore island, right? Like this is a real and legitimate and powerful economy. So MAS, again, hats off to them for being so forward. The banking community here is quite forward as well. The society's quite forward here as well. There's some talent. I think there's scope for the FinTech component to become even more important for Singapore. I think it's great.
Well, we're clearly here for the chewing gum, but besides this, it's a regulator. So having a forward-looking regulator who is not only in words but also in actions, making Singapore as a fintech hub for the region, possibly for the world, and then just looking at one place where we can consolidate our different geographies in this region. So it's a great place to be based for all of APAC, and that's why we opened our APAC headquarters here. We'll have 40 people by end of the year, and we're super excited about it.
I can't say anything that they haven't already said. You go to where your customers are, and you go to environments that are friendly to what you're trying to do, and I think both of those happened here for Ripple, and so we're pleased to have an office here.
Well, ladies and gentlemen, we're out of time. Please give me a hand in thanking Brad, Taavet, and Tim. Thank you very much.